Good morning, good afternoon, good evening to everyone who is joining. Thank you for tuning in for this panel, concluding panel or concluding plenary in the Financial Inclusion Week 2021, Lessons from Crisis and Opportunities in Digital Finance for Climate Resilience. My name is Jesse Fripp. I'm here today in my role as a senior advisor with the BFA Global Climate Resilience and Adaptation team. Really thrilled to be here with a truly outstanding panel of innovators in the intersection of digital finance and climate resilience. I think we're going to have a very lively, engaging, and informative conversation today. I'm going to ask everyone in the audience who would love to hear from you as we proceed. Please do drop in questions, comments, into the chat box, and hopefully we'll be able to preserve some time at the conclusion of our hour today for the panelists to respond to some of those, because this week we're also in the midst of the COP26, and this conversation is taking place in some regards in the context of the Digital Finance for Climate Resilience Framework, which was recently launched, led by BFA Global and supported by a really outstanding task force in the run-up to COP26. Before I introduce our panelists and kick off the conversation with them, I'm going to ask my colleague, Bethany Canton, to kick us off with a quick update and overview of the Digital Finance for Climate Resilience Framework to set the stage for our conversation today. So Bethany, over to you.
Great, thanks, Jesse. Nice to be here, and really happy to be having this conversation as a part of Financial Inclusion Week. So, hi everyone, my name is Bethany. I'm also with the BFA Global Climate team, and I'll just do a quick 5 or 10 minute introduction to some of the work that we've been doing on digital finance for climate resilience. So the topic of this Financial Inclusion Week, as Jesse said, is promoting prosperity in an era of uncertainty. And this is, I think, in reference to the COVID-19 pandemic, which is still very much ongoing in a lot of places. However, we also take an era of uncertainty to be in reference to the climate crisis, as we saw from this year's IPCC report and the ongoing negotiations and commitments being made at COP26, which is still ongoing in Glasgow. Climate disasters will become more frequent and severe, and there already are longer run changes in weather patterns occurring, like changes in rainfall and temperature. So an era of uncertainty can certainly be referencing the impact that climate change will have on all of our lives and livelihoods, and particularly on those that are lower income, excluded, or more vulnerable to these climate changes. So we know that the negative impacts of climate change are concentrated on the most vulnerable. And that can mean a few different things. So first, it can mean those who are dependent on natural resources for their income and for their food consumption, such as farmers or smallholder fishers. Climate disasters such as heavy rain, flooding, and storms can destroy crops or make it dangerous to go out to sea to go fishing. Weather changes such as reduced rainfall or higher temperatures can also impact the local viability of certain crops or can change the range of certain fish species. These populations are particularly vulnerable because they often live in rural areas without access to other forms of income and without access to financial services such as insurance to protect them from disasters or credit to rebuild after a disaster. Second, people that are more vulnerable often reside in particular geographies. Climate changes are local, so people in particular locations are going to be hit harder. For example, in South Asia, it's projected to become much, much warmer. And by 2050, 1 in 2 people in India will face extreme heat. Low-income urban dwellers are particularly vulnerable to climate change because they often live in more disaster-prone areas of cities. They live in homes that aren't disaster-proof, and they often have much more of their wealth in physical assets that can be wiped out during a disaster. The UN estimates that 4 billion people will need access to climate resilience solutions by 2030. I'll just let that sink in for a second because that's about half of all people on Earth will need access to solutions to make them more resilient to climate change. I just want to take a second to actually define what climate resilience is and what climate resilient solutions are. So people who are exposed to climate risks need to build what we call climate resilience. This is a central term to our discussion today, so I wanted to just take a second to define it. Climate resilience is defined here as the ability to absorb stresses and shocks, and also to adapt to these longer-term changes in climate. We hear a lot about emissions reductions in the context of climate change and with the ongoing COP26 conference. And climate resilience is sort of the other side of the discussion. So now that the climate has already changed and is going to continue to change, how do we protect ourselves and build towards what's going to be this new reality? So solutions exist that can actually help build climate resilience, particularly for low-income populations globally. For example, things like irrigation, insurance, cooling solutions, better building materials, better seeds and fertilizers, weather information, all of those sorts of things. However, lower income populations face barriers in affording and accessing these solutions, and many of them aren't actually designed with low income population needs in mind. Providers also face challenges in serving these populations. For example, given that they live in remote or rural areas, that can be really costly to serve them. A lot of these users lack any credit or transaction data, which can make it hard to offer them financial products. I'll just quickly go through a few of these examples. So the first is irrigation. So irrigation can be a really powerful tool in helping smallholders become less reliant on rain-fed agriculture and make them more resilient to longer run changes in precipitation. However, many of them face challenges with the upfront cost of irrigation systems, and they actually lack access to physical products in the remote or rural areas where they live. A second example is disaster insurance. This can be a really powerful tool in helping to rebuild after a disaster and protect your assets and livelihoods in the event of a disaster. However, providers face barriers in providing insurance to these populations because of lack of access of data and actual reach. It's expensive for them to evaluate losses in the event of a disaster, and many low-income populations lack awareness and trust in insurance. Final example is emergency cash transfers and remittances. There's a lot of data that suggests that just emergency cash immediately following a disaster can be a really powerful tool in helping communities to rebuild and to avoid the immediate short-term impacts of a disaster on food security and things like that. But many populations maybe lack access to cell phones or data connectivity, or it's expensive to transfer money. So we believe that digital finance can actually overcome some of these barriers because we've seen it happen in the past with sectors like Paygo Solar and inclusive fintech. So for example, digital payments can eliminate transportation cost, effort, and risk for users. Digital loans can enable faster and easier disbursement for lenders and enable more flexible repayments. Online marketplaces can give users access to a greater number of buyers and more competitive prices. It can give transparency to buyers and then a greater access to a more variety of inputs for users. And all of this while building a transaction history for users that can be leveraged for future financial products. InsurTech technologies can increase access to insurance products through smaller, often bundled or embedded products, and through pairing with IoT devices that can enable parametric offerings that reduce time and cost for evaluation and payout after a disaster. Finally, fintech infrastructure such as eKYC and biometric improves information quality and shareability between platforms. So taking these two things and putting them together, earlier this year, we began exploring the intersection of digital financial technologies and climate resilience technologies, a space that we started calling digital finance for climate resilience. We believe that digital finance-enabled solutions can reach up to 1 billion people by 2030, which is 25% of the UN's global target. So we see a lot of potential for these solutions to enable greater climate resilience. As a part of this work, we mapped out actual solutions that exist at this intersection and laid out 8 investment theses for early stage investors and innovators that want to start to think about this space. We also mapped out actions that a variety of players in the innovation ecosystem can take to catalyze innovation and growth within this sector. All of this work is on a web interactive site, which there's a small photo of here, which we'll send the link in the chat in case you want to take a look. And so, yeah, with that introduction, I'll start to hand back over to Jesse. Today, we're talking to some Df4CR innovators themselves about the opportunities and solutions they're working on in the market to build climate resilience through digital finance. So we have some great panelists here. And with that, I'll hand back over to Jesse, who will be moderating our discussion.
Terrific. Thanks, Bethany, for setting the scene for us. And welcome again to our really outstanding panelists. Really excited to have all of you here with us and looking forward to hearing from you. As we all know, this panel is taking place under the Financial Inclusion Week thematic umbrella of promoting prosperity in an era of uncertainty, starting really from the premise of understanding the impact of the COVID-19 pandemic on vulnerable communities. The CGAP Pulse and other global and regional analysis that's been conducted over the last 18 to 24 months related to financial inclusion and resilience appear to demonstrate some significant setbacks in this regard overall, though we are seeing some silver lining in that the COVID crisis seems to have accelerated in some ways the pivot toward an increasing use of digital channels to deliver essential resilience tools such as remittances, cash transfers, digital commerce, some of the things that Bethany has covered in the description of the Df4CR framework in many countries. To kick us off, I think I'm going to ask the panelists, we're going to get a twofer, a kickoff introduction of each of the panelists and a brief overview of the organizations they represent. And also ask you as part of your introduction to, from the perspective of the enterprises and ventures you're leading, to maybe kick us off in terms of connecting this thread of the insights that as we've lived through the COVID-19 crisis and we think about what we have seen and learned from responding to that crisis and supporting vulnerable communities, how those lessons may relate to the broader systemic crisis of climate change and the issues of lessons that we can draw from that experience in climate adaptation and resilience for vulnerable communities. So I might ask, just running down the line, Lasalet Gumban, to introduce yourself and the National Confederation of Cooperatives and give us some perspectives on that kickoff question.
Good day, everyone. Good morning, Jesse, and my co-panelist here. Good evening here from the Philippines. My name is Lasalet Gumban from the National Confederation of Cooperatives, or NATCO. NATCO is the National Federation of 842 cooperatives in the Philippines, owned by 5.8 million individual members. We have a wide array of financial products and social programs for member cooperatives. And last year, we started our Co-ops for Climate Action Program. And this is very much in line with the Co-op's mission of improving the quality of life of the members. And in order to do that, we should protect and preserve our natural asset base, our environment, especially that the Philippines is highly vulnerable to the impacts of climate change. And we have experienced that with so many typhoons last year. And these tremendously affect the income, health, livelihood, and future of our members. Amid the pandemic last year, we had 10 typhoons hitting the country that made our COVID recovery efforts more challenging. So as a National Co-op Federation, we believe that our role is very much significant in building resilient communities through continuous education, access to resources, and practical tools for our members. So the first takeaway from the COVID experience is co-op should really go digital. And we have seen that co-ops that are digitally ready have thrived because their connection with the members did not stop. They continue to provide accessible and relevant services to the members, reaching even the remote villages. And these digital services provided greater inclusion and strengthened the connection with the members. And this year, there are some co-ops that even surpassed their net surplus pre-pandemic because their connections with the members have gotten stronger and became even more borderless. Secondly, there is a need for a business continuity plan for co-ops. Although no one has really predicted the pandemic, the business continuity plan at least has approximated the scenario during a crisis and has a clear operability plan towards recovery that is being understood by every member of the organization. And this business continuity plan should also be integrated with the disaster risk reduction and management plan of the co-ops, especially that the Philippines is one of the most disaster prone countries in the world. And finally, staying close with the members and the community, connecting with them in a meaningful way, with knowing their status and offer ways to support them. I believe that this is really one of the differentiating factors that strengthened the patronage of the members with the cooperatives. In the Philippines, during the crisis, the co-ops were the first to provide food packs and PPEs to frontline workers, provided financial assistance to members, and donated to local government units. It was easy for us to do that because we know the people, we know the community, and co-ops have budgets for community development that we were able to tap to provide immediate assistance. Direct help at the local level was a lifesaver for many. Thank you.
Thank you very much, Leslie, for starting us off. I mean, I think you really have honed in very, very strongly on this intersection. I mean, the fact that NAPCO was supporting over 5 million individual members through the COVID crisis and through, not one, not two, but 10 typhoons during that period. I mean, I think really draws a very sharp underscore to the topic we're engaged in today. And the lessons that you've described and the learnings are really, really spot on, I think, for many institutions that are working to support their members in the front lines. I'll pivot then with the same question and introduction, though perhaps to someone who needs no introduction, Nick Hughes, who's here with us today. Great to see you again, Nick, and tell us a little bit about what brings you here at 4R Digital and drawing that line of connection between the pandemic and the bigger challenge of climate change.
Yeah, thanks, Jesse. Look, and thanks for inviting me on. It's always a pleasure to meet and talk about some of these topics, which, I must say, although we've had a dreadful 18 months and there's a lot of lessons that have come out of COVID, but I'm quite optimistic. I think what we've seen in the last year is an acceleration towards digital, and for me that tells us what we can do when we have to do it. And we're sometimes all impatient to see change happen, but just from the businesses I've been involved with, we've seen quite a positive silver lining in some ways of quicker adoption of digital services over the last 18 months. Bcash very well, Jesse, and if I look at the work that the Bcash team have been doing, they've been integrating those mobile wallets to well over 20 different financial institutions in the last 18 months, and that's sort of 4 times as much as they've done since we set the company up back in 2011. And that's because agents were closed and we needed to find other ways to get cash into e-money and into wallets, and so it's accelerated that sort of level of integration out there. And that's one reason why I'm optimistic. And if I take a step back, nearly 93% of the population is now covered by some form of connectivity, and whether it's the GSM connectivity, it's only going to get better with low orbit satellite connectivity coming. Costs of that access are coming down. Affordable handsets now, smartphones for and semi-smartphones for tens of dollars, not hundreds of dollars anymore. And I think we've got the ingredients to start doing more with digital finance to address some of these challenges in climate. So I'll talk a little bit later about some work we're doing in 4R Digital. It's a new company, but we actually literally set it up during COVID. But we're really interested in what we can design as early stage concepts around using that digital connectivity and digital finance to tackle some real economy problems. And I'll talk a little bit later about one or two of those. Thanks.
Terrific. Thank you, Nick. Thanks for reminding us that in the midst of great crisis, we shouldn't forget that there is opportunity, and I think the point of that you make in terms of that acceleration to digital, I think we've all seen different examples of that. I think the example of Bcash and what Bcash has been able to do in terms of really tying together that supportive infrastructure in many ways that can reach the most vulnerable and the really remarkable time frame. I mean, that's a terrific example of what we're talking about and that broader opportunity space. Valentina Rogacheva from Vercor, I'd love to give you the talking stick to introduce yourself in Vercor and maybe speak a little bit about where you're seeing that sort of trajectory of lessons from pandemic to the global crisis and climate.
Thank you, Jesse. Hello, everyone. Very glad to be part of this conversation. I'm Valentina Rogacheva, and I'm co-founder of Vercor. It's a company that is based in Mexico, and it's the first platform in Latin America where farmers can purchase everything they need on a credit. Every purchase is financed, and we're working with agricultural sector where millions of farmers are excluded from the financial system. So what we saw in our experience with farmers that unfortunately, as the same as climate change, COVID disproportionately hurt the poor and hurt the most vulnerable ones. For example, we saw that the agricultural sector really showed its strengths. It didn't stop. It was the only sector that grew in the country. But what it cost to the farmers to continue their activities is a question, because many things were not available for them, like online shopping, digital transfers. So they actually had to go out there and continue their work. But the positive side, which we noticed, is that the adoption of digital technology accelerated significantly. So rural communities really saw the importance of digital technology for them. And for us, it meant a real growth of sales, because in this case, we could offer real value to the customers, so that everything they needed was just one click away from them. And that was something innovative and useful in the time of crisis, as much as it's now.
Terrific. Thank you, Valentina. Really important points about the ability to really be accessible to those vulnerable customers, in the moment of need, and at that one click away kind of solution paradigm. I think that hopefully we'll have a chance to talk a bit more about those applications and where you see that going in the future. But diving further into this kind of intersection and journey, let's talk a little bit about the journey that each of you have had in actually entering the climate space, because I think one of the remarkable things, and many who are in the audience with us today may also sort of share this perspective, given that we're at Financial Inclusion Week, not Climate Inclusion Week. Each of you brings a lot of expertise from financial inclusion or fintech, but not necessarily climate. So it'd be really, I think, useful to dive deeper into the conversation with a bit of further insight about your own journey in getting into this space, and also the companies and institutions that you represent. How and why did you decide that the climate lens was essential to what your business objectives are and your approach to climate resilience in the institutions that you represent? And maybe we'll come back to you, Nick, and ask you to share your insights on that.
Yeah, great. Jesse, this is going to give me a chance to confirm just how old I am, because about 35 years ago, I was wrapping up my PhD in applied environmental science. So I spent the first 10 years of my career actually working in the energy sector. And I ended up at a big oil and gas major, BP, under a guy called John Brown, who was really visionary. And he started that transition. He said, look, hydrocarbon's going to end at some point. And we were running, I was, one of my projects there was actually building a carbon trading system. That was back in the 90s, because John Brown had said, let's discover let's bring an external cost into and find out what the cost of carbon is. And so we, and then I took a sort of a diversion into fintech, as you know, with M-Pesa, and then we set up M-Copa. So I have this sort of weird cycle of life thing going on, because I'm working back again now in the climate space. So I have been in this space before, and but for me, this is the importance of fintech. What we can do with fintech, it's an enabler, and for many years we all worried about credits and savings, and we were thinking very traditionally about in quite vertical parameters around financial inclusion and how can we get financial institutions involved. But actually, I think we've gone way past that now. I don't want to say by any stretch we've conquered financial inclusion. Of course we haven't. But I think we're realizing that financial inclusion is only relevant when you link it back to something in the real economy. What are you saving money for, or what are you sending money for? What's happening as a result of that financial transaction? And that's, for me, the really exciting part about about the link here to climate finance. And one of the projects we're working on in 4R Digital involves using this digital connectivity and digital payments in the voluntary carbon market space. And if we get a little chance later, I'll spend a few more minutes on that. But for me, it's just, we have these tools. We have the ability to connect people and devices. We have the ability to send small amounts of money around at a very low cost. And we can use those tools to drive behavior change. And that, for me, is really what we can do with digital finance in this space.
Thanks, Nick, and terrific. The full circle.
Yeah.
We'll take that in the best. It's a recurring theme, and it's great to have you back in this space. But I think you really pull out. One of the superpowers I think that we all recognize, if we can use that term for fintech, is the scale. Importantly, the intersection of that capability with the fact that, as Bethany pointed out, I mean, the impact of the climate crisis is the ultimate scale. And as we talk about 4 billion of the most climate vulnerable, the channels and rails that will allow us to get solutions and tools for choice and control in adaptation and resilience in the hands of those 4 billion, fintech and digital finances. Now, I think we're all here because we're excited about that potential, even if we know we've got a long way to go. Maybe I'll turn it over to Valentina next, if you wanted to maybe comment a little bit about your journey in that regard and what led you. I mean, Vercor is a startup, and hopefully we'll talk more about that journey as well. And let us know how you got here. What brought you?
Yeah, well, actually, what we saw is that the weather is the main risk in agriculture, and is the main risk that farmers have in their daily activities. Basically, the results of 6 months' work depends a lot on the weather. And with all that crisis that we're experiencing now, the problem of financial exclusion in agri sector is actually caused that the financial institutions see it too risky to lend to farmers because exactly of these extreme climate conditions, extreme weather conditions. So when we wanted to create a solution that actually solves the root of the problem, we wanted to bring capital to the industry. We wanted more capital to be lent in agro. And that's why we realized that we need to urge our clients to implement practices for climate resilience. So that in this case will mean that they are less probable to lose their crops, they're less probable to be in default, And like these, every year they can be recurrent clients in financial institutions, and they can grow their businesses and they can become financially sustainable. So for us, that was like essential part of the work we're doing.
Thank you very much, Valentina. I think you've really touched on a critical point, which is, the climate resilience issue is really core to access to finance. And if we think about it, there's a lot of work happening at the macro level. The Network for Greening the Financial System, the Bank for International Settlements just put out last year the Green Swan report. I mean, a lot of thinking about risk, but not really. I mean, I think the work that you're doing is really on the very forefront and cutting edge of actually how to solve that. I think you used the word solution, and without addressing head on that issue of the climate resilience risk for smallholder farmers, it's going to be very difficult to get sustainable finance to those farmers. And so, really exciting to hear about the work that you're doing, Lazalet.
In the aftermath of Typhoon Haiyan in 2013, NATCO built the NATCO Resiliency Fund. It was set up to lessen the impact of natural calamities that may hit cooperatives. 30% of the fund is reserved as grant fund for cooperative employees and officers affected by the calamity, and 70% for the restoration of facilities, which is a zero interest bearing loan and can be used also working capital or a soft loan. So that was the start of our journey in the climate action space. And this was formalized when we joined the Co-ops for SDG 13 Climate Action Program, conducted by the Asian Confederation of Credit Unions. Last year, also in the same month, the International Cooperative Community celebrated the International Day of Co-ops with the theme Co-ops for Climate Action, focusing on the contribution of cooperatives to combating climate change. And we were introduced to the business solution of ACU, Co-op's contribution to climate action. So we have learned about the 6 ways and how we can integrate climate action into the core programs and services of the co-ops. In particular, adding the climate compliance measurement in assessing loan application, or the 6C of credit, making sure that we are not supporting enterprises that harm the environment, and also helping our members improve their procedures to be climate compliant. And it also includes tools for energy and waste audit for the co-op members. And nationally, we are also being guided by the Philippine Climate Change Action Plan, focusing on the areas of building adaptive capacities of communities, upgrading the resilience of vulnerable sectors and ecosystems, and also optimizing mitigation opportunities towards sustainable development. So we based our programs and activities on these pillars.
Thank you, Lazalet. I mean, that's really terrific. I mean, I love even as Valentina, you also mentioned, bringing that climate risk into, directly into your underwriting process. I mean, the 6 C's, those of us who come from a banking and finance background, we know the 5 C's well as sort of the key, factors in sort of determining underwriting risk, and the 6th C is a terrific addition. And I would also just observe, I think the nature of cooperative structures. I mean, we talk about climate centricity and voice in this whole conversation. And I think, cooperatives like the network that you represent, are really sort of a direct representation of how that can work in action at the front lines. So it's terrific to hear that. Maybe moving to our next question. There's been a lot of dialogue at the global and intellectual level, if we will, about climate change and climate resilience. And Bethany, and we've opened us up with a bit of that in the framework, and we've touched on it. But we all do have some uncertainty about what will really deliver tangible resilience outcomes, not inputs necessarily, but outcomes, and how we understand those. And it would be useful to maybe just pick up on the comments you've all just made, and talk a bit about how your organization is building climate resilience in practical, measurable ways, and in ways, how are we capturing the outcome of the work that is being done, and sort of what is your approach to that? And maybe, I don't know, Valentina, if you'd like to kick us off.
Sure. So with all the environmental problems that we have seen over the past decades, there has been a major shift in the sector that we're working in, is agriculture. So, for example, what it caused is that now agriculture is not anymore resource-driven, but it's productivity-driven. What it means is that instead of using more land, more water, more chemicals, more these kind of resources to produce more crops, what is used is that now the growth is based on increasing efficiency. And how it is achieved? It is achieved through the use of new technologies, of new practices, of use of organic products. But what happens is that all these things that help to increase efficiency in agri-sector, all this is unavailable for farmers in developing countries. It's expensive. And the efficiency gap between the developing countries and advanced countries is increasing and increasing every year. So the most vulnerable are struggling to build a climate resilience. What we are doing in practice, what we're doing in Vercor, is that we solve the problem of liquidity for farmers. And it means that now our clients, they can have access to new technology, like drones, for example. So they can fertilize using drones, they can use less fertilizer, they can save money, so they reduce costs, they increase incomes. They can have access to agro supplies like new agrochemicals, new fertilizers. All this helps them to increase efficiency. We also provide capacitations to farmers, so now they don't pray to God if something happens in their fields. They actually know what to do, which technology they can use, which product they can use. And another important thing is that we also help farmers to finance the insurance. So in case of any damage to their crops, they still can recover their incomes. They can still provide for their families. So all this integral service that we give helps our farmers. It gives them tools actually to build climate resilience. And for measuring our impact, for actually seeing how our services influenced the farmers, we measure the income increase of the farmers of two similar groups, the ones who used our services and the ones who didn't. And all the time, this income increase is caused by higher productivity and higher quality of the crops that farmers could achieve thanks to financial services that they could get. So that's how that it's a measurable and visible impact in Vercor.
Terrific. Thank you very much, Valentina. Those are really very tangible and real, and I love the way you're able to look at you're not doing an RCT, but you do have in a way a control group to look at. I might pick up and hand that off to Nick. We had an audience question as well that I think, Nick, maybe you can work into your response related to what has changed to put this on the agenda more prominently.
Yeah, happy to. And, really building on what Valentina was saying there, look, we have these technologies now. We've got to find ways to deploy them. And but I think to the audience question that I can see has popped up about why is this so topical? What's happened? But I actually think there's been a real shift in public awareness and consumer awareness about the climate issue. I think most large corporates and even the sort of next rank down of medium-sized organizations are now taking it very seriously because they know consumers are interested in this and they're concerned about their brand. And I without joking about my age in this, working in this sector, I think 20 years ago, the sort of word greenwash, or two words greenwash, was thrown at some of this, and it sort of stuck quite a bit. But I think that's changed. I think there's a generation of people coming through that know how critical this is. They want to see corporations take real practical steps forward. You've got more government legislation coming. I'm actually calling you from COP26, where I'm presenting on a product I'll share in a few minutes. It's real. I mean, there's complexity and there's political sort of differences, but underlying it all, and this is another reason for optimism, I think the generation of youngsters growing up want to see change, and they'll demand that change, and I think the governments will realize that. So it's here, and it's real. And if you listen to what some of Mark Carney, the ex-governor of the Bank of England, has been talking about this week, he's saying this is all about values, and this is how modern society needs to start putting different value on different things, and climate is one of these existential sort of threats that's here to stay. So very quickly, if I can just share one of the concepts we're quite excited about. We think it's very practical, and it's to do with the voluntary carbon markets. Now, this is quite a complex space, and I'm not going to cover it in a few minutes, but basically in the voluntary carbon markets, if you're an organization and you can reduce your emissions and below your target, you actually have below net zero by taking carbon out of the ecosystem, or locking it up in some way, or displacing a fossil fuel being burnt. You can capture that carbon offset and sell it in the markets to people that need to buy credits because they can't reduce their own emissions as much, but they still want to commit to a net zero position. So that concept of carbon markets has been around a long time, but it's very inefficient. And what's happened is there's a big problem in that smaller entities and smaller organizations and projects, especially in the global south, can't get access to those markets because of all the overhead costs of getting into that space. So if I could share the slide, please, that I've got. What we're building in 4R Digital is a two-sided platform. It's the bit in the middle called Carbon Value Exchange, the CAVEX one. And for me, this is a really obvious thing that we can do now with digital technology. So the two sides of this platform are, on the right-hand side, these are the corporate organizations that are committed to a net zero target. And that's what I was saying earlier. This has changed. I mean, 38% of the FTSE 250 have now committed to net zero either by 2040 or 2050. So there's real commitment here. And there's a load of ESG investors saying we'll only invest in organizations that have committed to net zero. So that commitment is there, and that's been a change, I think, as we were talking about earlier. And then over on the left-hand side, as you look at the screen, there's all these small projects which are currently excluded from getting access to some of those carbon markets. And these could be distributed solar schemes, they could be electric vehicle schemes, it could be agriculture and land use change or forestation. Unless you're big, you won't really be able to get into the carbon markets and access climate finance by selling your credits. So we think there's a way to bring digital technology into play. We can design that because of this connectivity I mentioned earlier. We know we can collect data, very accurate data, from quite small levels of micro activity, and we can capture that data and use that as the evidence to show the offsets are happening. We can pull that into a cloud platform, we can clean the data up, we can aggregate smaller projects to the point where they become viable as a security to sell. We can create digital ledgers that keep those records, and then we can engage the buy side market with purchasing credits with a direct line of sight all the way back to relatively small projects on the ground in as I say, in emerging economies typically, or in the global south. And then, of course, as we all know, we've got digital finance to sort of oil those wheels. We know we can take a $10 ton of carbon purchase price and move most of those $10 all the way back to the project participants. And so for me, this is a good example of how we can use digital finance, digital connectivity. We can provide access, we can democratize access actually to these smaller projects to get into the market and access that climate finance. And this for me is a very practical way to sort of use digital technology to change the landscape of how we can reward incentives for clean development. And this works for carbon markets, but the same principle work for climate adaptation, for climate mitigation. If I can prove that a certain activity has happened, then surely I can make a small digital payment to reward or incentivize a community or a household or a small business for doing it. So thanks for letting me share that detail. But we're talking about this here at COP, and we think this is the sort of practical approach that we now need to take towards getting access to this vast wall of climate finance for smaller projects and smaller companies. So yeah, Jesse, back to you, really. But for me, the thing that's changed is, want to respond to the audience question. There's been a sort of substantial increase in serious commitment on the right-hand side of that chart from organizations that are really committed to a net zero approach, and they're looking for opportunities to change not only their own activities, but also their partners and down their supply chains. Thanks.
Terrific. Yeah. Thank you, Nick. I mean, you put out a bunch of really important points, and I think the sort of the sort of demand-driven, the democratization of demand, I guess, for these solutions. I think that's a terrific way to describe it, and the fact that you have, of course, global corporates all the way across the board to every level of enterprises leaning in increasingly to this. You touched on ESG, and I think what you've described, I mean, the E in ESG, I mean, there's a lot of great work going on. WEF just put out an updated sustainability framework. IFRS put out some additional standards even this week. I think we're seeing a strengthening of the E metrics. I mean, I think, and what you've described is a great example of moving beyond sort of just the focus on the mitigation elements of E and GHG into how that can bridge into adaptation and resilience, particularly for the global South. And I'm sure your session at COP26 is going to be a popular one. So look forward to hearing the feedback from that. I want to give a word to Lazalette and in response. I guess that's a two-part question. The measurement, how you're looking at really measuring those outcomes of everything you've described you're doing, and as the audience question premised, what do you see as sort of changing in terms of the awareness and what's driving demand for the kind of solutions that you described as NATCO putting out for its members?
Yeah, in relation to what Nick has shared last month, we also launched our Green Co-op Award. This is to motivate our members to implement green practices across the programs and services of the co-ops, with areas focusing on improving environmental and climate awareness and knowledge, reducing energy and emissions, managing resources and waste, and investing in green and climate smart technology. So we have indicators also among these four perspectives, and we hope that through this we can really measure the outcomes of the members and also toward long-term impact.
Terrific. Thanks, Lazalette. I think we see a lot of convergence, and I want to give a shout out. Mayada El-Zogby is online with us today, and thank you, Mayada, for being here. She just noted that she wanted to give a +1 to Nick, that we're in a different time where climate awareness is more broad-based, and noting the importance also not only of this as sort of a resurgence of sort of awareness and demand for change from the grassroots, but also enabled and facilitated by organizations like CFI, like CGAP, like BFA Global, and the Digital Finance for Climate Resilience framework that is helping to prioritize and give form to action around this topic. I mean, throughout the Financial Inclusion Week, there's been a green thread of climate and green finance woven through several events yesterday and the day before, and that is helping to also, I think, mainstream and I mean, let's be frank. I mean, at COP26, these are policy conversations, but this also helps from the democratization side, from the corporate side, to really put some pressure on the policymakers to create the frameworks and put the funding behind accelerating some of these innovations and initiatives. Maybe we do a lightning round. We'll continue to take questions again from the audience dropping into the chat. Would love to hear from each of you or from whoever would like to respond as we kind of look at the blue ocean, kind of the blue ocean thinking. What other innovations do you see out there that you think that you're excited about, that you think will be critical to building resilience, that you see as potential kind of inflection or leverage points to what you're directly trying to do and engaged in? Anything come to mind? Anything you see happening in your market or other markets that you really say, wow, that is we need to see more of that? Anyone want to pick that up?
Yeah, Jesse, I would like to share about our excitement, because exciting things ahead. We see a lot of opportunities opening up with regard to providing holistic and inclusive services for our members. For our cooperatives in the rural areas that rely on agriculture and fisheries, we plan to collaborate with the Department of Agriculture to adapt to climate resilient agriculture technologies and approaches. And for our cooperatives in the urban areas that are often affected by constant flooding, we can tap resources of our member co-ops to install rain gardens for flood control. And also in the rural areas, our activities are ongoing to promote renewable energy that can be accessible to all, especially those in small villages, harnessing solar energy and other renewable energies to electrify homes and public places. Currently, there are still 1.62 million households in the Philippines still without access to electricity. And this presents a tremendous opportunity for co-ops to serve the underserved.
Some terrific examples and very tangible, very, as we're saying, at the the grassroots level of action, but including you mentioned public sector action, which I think is imperative. I mean, scale in many ways, even and especially in the digital space, will rely on public sector action and partnership. I think very proactively. It's a great point that you raised there. Anyone else, Nick or Valentina, would you like to comment on that?
Yeah, like to chip in. So. Yeah, and really just the examples of Valentina and Laszlo have already shared are brilliant, because they, those are how we can see the importance of climate adaptation, mitigation, working down into those value chains, whether it's especially in the agriculture sector. That's massive. But there are others as well. Think about the mobility sector with electric vehicles coming. There's a massive opportunity in emerging economies to leapfrog straight towards EV schemes. I think that's going to be a really important area. Everything from the way we need to think about climate resilience, a couple layered on top of urbanization. That's another massive challenge that we can see ahead of us. But again, I think the technology can give us some solutions to it. Just a word from the investors' perspective, Jesse, because there's a lot of money being lined up to go into this space, and so we've got to be conscious of what we've seen before in these cycles. Do you remember everyone got super excited about microcredit and microfinance in 2005 was the UN year of microfinance, and then it sort of suffered a little bit because a lot of money flows in. And there isn't really the pipeline to deliver, or we haven't figured out those business models yet. And the same will be true, in climate tech. We've got to stay, or climate resilience applications. We've got to stay focused on solving real problems and not get too excited about it. Are we able to see business cases that can be built from the ground up using very solid unit economics that link to climate? And it is going to be hard, because it's super hard to find scalable business models that work at the lower in the lower economic tiers without things like subsidy, as you mentioned, Jesse. So there will be challenges. Let's not fall into that trap of getting super excited and then disappointed as we realize that it doesn't play out the way we think it will. But back again to where we started. For me, there's a change in attitude. There's a lot of money available. There's governments bringing in legislation, and we have digital technology, and that combination for me makes for a very positive next few years. But there are some risks and there are some challenges. Yeah.
Thanks, Nick. You raised some great points. I want to give Valentina. I don't know if you wanted to comment on that last question. I think, Nick, you raised the point of what's required from a funding and investor perspective. So we maybe want to close on that. But Valentina, your thoughts there?
Yeah, I think, as Nick mentioned, there are a lot of exciting technology and solutions on the market. And I think the most promising ones are the ones that are based on data. And because the traditional sectors in emerging economies are really missing that part. So from investors' point of view, I think what innovators require is patient capital. We require this right environment for developing our solutions and for scaling them. So basically, all the capital that has been invested in that is still few for reaching millions and billions of people in need, for reaching vulnerable sectors. And that's what I hope that the tendency is going to, and more investors going to be focused on that and supporting impact-driven entrepreneurs.
Yeah, and I just to make a comment on that, in the Df4CR framework work that Bethany gave an overview on, there was quite a consultative process there, and we did benchmark by looking back at different sectors, microfinance, as Nick mentioned, and fintech, PayGo, and there really is a critical need, especially at the beginning, for a concerted flow of catalytic capital from primarily, grant capital, but then quickly moving into blended finance and having really a compressed time frame of that continuum of capital that can support, promising business models and ventures, quickly to once they're proven out to scale and replicate. And I think, hopefully, if there are any of those funders and investors with us today, they'll be thinking about that and leaning into that. There was an audience question, Valentina, for you, I think specifically around the question of education and awareness at the client level, and you're specifically focused on smallholder farmers. Do you feel that is there a real grasp of the climate resilience issues per se that you're addressing? Do you think that increasing, some additional education at the level of the smallholder farmers that you're working with would have an impact on increasing and accelerating uptake and progress in that regard? Maybe just a couple of quick comments as we work towards the close today.
Yeah, sure. Certainly, educational gap is a huge challenge that we face. So for communities in rural areas, it's common to take decisions based on empirical knowledge. They use things that worked for their fathers, their grandfathers, and this lack of digital literacy as well prevents them from learning, from accessing information. So it's a big challenge. Fortunately, internet coverage and capacitations that are widely available from many solutions, they help to solve this problem, but still we face this is one of the barriers, like, for example, that a client wants this exact product, which is orange with green letters. And here there is a lot of work from our part to explain what actually is the product, what are the benefits. So people are not still like a lot of knowledge about new things, new technologies and their benefits. So here, I think what works for them is to show this cost effectiveness, to show this real benefit in money that they can obtain by actually building climate resilience, and because that's what actually can help economically their families, and that's what works with them.
Terrific points. And Valentina, while I still have you just for a minute, your Vercor is a member of the climate cohort of the Catalyst Fund as a startup. I wonder, we're talking about supporting systems for promising new ventures like Vercor. I wonder if you could maybe just share a couple of quick thoughts on that journey thus far. I mean, how has that made a difference for you and for Vercor and the work you're doing, being part of that kind of an ecosystem support.
Yeah, certainly, Catalyst program has been a unique opportunity for us in many senses. The program really helps inclusive tech startups, and it was really tailored for our needs. So what we got is the opportunity to improve our tech solution. We met high-level experts that helped us to prepare everything for our next investment round. We got patient capital that we could invest in our operations, in expanding our operations. So the program really has played a catalytic role for us. And it's, I think it combines all the elements for the innovative solutions to have opportunity to scale and to reach millions of people. And that's what we saw in Vercor in a few months working with Catalyst. So that's been that's been an incredible experience.
That's terrific. No, thank you for sharing that perspective, Valentina, and great to hear about the impacts there. I think we've closed out our hour. I mean, there's a lot to talk about. I mean, hopefully we can convene in another forum before too long. But I really very grateful, Valentina, Lazarette, Nick, for all of you for being here, for sharing your perspectives, for all the work that you're doing, the heavy lift. Thanks again to the whole team from the Center for Financial Inclusion for having us and hosting us in this conversation. Bethany, thank you for kicking us off with the Df4CR overview, and on behalf of myself and the team from BFA Global, we'll look forward to seeing where we are next year at COP27, when I'm sure that all of the work that everyone on this panel is doing, and many others who are inspired by your examples, will be helping to define that agenda increasingly as we go forward. So thanks again to you all. Thanks to our audience, most especially in the terrific questions, and we'll see you again soon.